I would say the markets last year they were more or less flat. Of course, there have been some fluctuations, but the equity index didn't change much. It fluctuated around a certain level. And this, I think, reflects the situation in the economy. The economy experienced a sort of shock, external shock, such as falling price of oil, which decreased on average annual basis by around 45%. And in my view, the economy performed relatively well, given the magnitude of the shock, because about a year ago, people expected much deeper contraction with much higher price of oil. But I think Russia demonstrated once again it's a great survival story. It's maybe not as good at growing, but surviving abilities are quite strong. And the market fully reflected that. So equity index follow more or less fluctuations with the price of oil and various expectations about sanctions and other rumors. But generally, last year they remained flat, which more or less can be explained by the economic situation in the country. I don't think so that this year there will be a massive increase in bond issuance, because in the previous years, by the way, it's also worth remembering that in the past decade, for example, all this borrowing, foreign borrowing, not only primary issuance but also syndicated loans, whatever the Russian economy on aggregate borrowed on the global market, didn't bring, I would say, very good results. Economic growth almost evaporated in 2013 with massive external borrowing, with massive capital inflows. There was also an outflow, but that's what I mean. Whatever was borrowed on the global markets basically left the country. That's why there are no guarantees that if companies borrow more these days again, it will contribute to economic growth. I'm rather skeptical, given that most likely sanctions will remain in place, and some discussion may be held in about media, but it will be already too late for borrowing. We may see some new issues, but I'm rather skeptical about great appetite. And Russia is a surplus economy. Current account surplus, I think that was also quite surprise for many that with falling oil price, the current account last year widened. That's what helped Russia to survive this, to weather the storm and repay all the foreign debts. And it's not yet a growth story. When we'll see more or less clear trajectory of domestic demand, then we'll see more borrowing. To repay foreign debts, borrowing will be limited. I'm also skeptical about the plans of the Russian government to borrow, and especially if the oil price slightly rebounds from the 25-30 level. That's what we have seen recently. Oil exceeded $35-36 per barrel. And my view is that if oil at some point approaches, let's say, 40, and on average annual basis stays there, which is likely, which is possible, then the appetite for borrowing, both local and even domestic, will go down. So again, my view that this year we won't see much initiative, or at least there may be some appetite for Russian bonds from the various investors, particularly I would say from the local investors, because the economy is basically full of cash. Cheap cash comes from the budget when the government depletes the reserve fund. So it needs to be invested somewhere. But I'm still skeptical about massive change in the interest rates, because central bank, if we're talking about local rates, central bank is quite reluctant to cut key policy rate, which means that the sovereign borrower pays double-digit rate, and this keeps all other rates high. So until we see a change in the economic situation and more decisive steps by the central bank to cut the rates with some quantitative tightening accompanied by this tightening, then it can help to revive the bond markets. I think Russia is fine with any price of oil. We have seen 10, 15 years ago when Russian growth was very strong, 2001 to while the oil price fluctuated below 30 or around $30 per barrel. So with a proper exchange rate, with no interventions from the regulators such as the Ministry of Finance or the central bank on the FX market, the economy finally finds an equilibrium, and then it starts moving on. What's bad for the economy, it's a change in the oil price, expectations of further decline of the oil price when people watch where the bottom is and they don't make investment decisions. So that's a problem. A rapid change in the oil price, that's when economic activity stops. But when the price of oil and the exchange rate stabilizes, doesn't matter at which level, then business recovers. I think Russia has a number of advantages over the rest of the world with regards to the macro balances. It's surplus economy. It's current account surplus, which is very strong. It's not leveraged economy. Domestic debt, whether it's consumer debt or corporate debt, it's very low. Ratios are really not comparable with many other countries. Foreign debt, despite massive decline in the oil price and weaker currency, didn't change much, particularly if you also take into account that part of the foreign debt, it's the ruble denominated debt, and also there is intercompany debt. So pure FX debt is very low in Russia. So it's a competitive advantage. What's bad in the country, it's too high inflation and high rates as a result. So that's what needs to be improved, bring inflation down, and this is a pure macroeconomic policy. It's not what comes from the outside. It's just policies, to improve policies, to cut the rates, and stop experimenting with all those quantitative measures. Don't mess up them with interest rate policy.